Hey, good morning, guys. So, second video for the day. It's Saturday. I hope you're having a great weekend. I wanted to dive into really quick Marathon Digital Earnings Report. It wasn't as great as people were expecting it to be. So, why don't we just take a quick look at it here? Okay. So we're looking at the consolidated condensed statement of operations. It's unaudited for the 3 months ended June 30th. So we're looking over to 2021 versus 2022. Cryptocurrency mining revenue is way up. Obviously, it's 30 million almost from 286,000. So total revenues were 29 million, and compared to 286,000. Cost of revenue obviously increased way up as well, at almost 7 million compared to 700,000, 40. And then compensation of related taxes was 4 million, which is to be expected. You're obviously mining more, you're going to be paying more taxes, you're getting more people involved. Consulting fees also jumped up from last year to 105,000 compared to 24,000. Professional fees jumped way up, 2.1 million compared to 162,000. General and administrative is up also almost 3 times as much, from 278,000 from 89,000. And then impairment of mining cryptocurrencies was 11 million. Impairment, not sure what that means. So total operating expenses was 24 million compared to 2 million. So income, they actually had a gain on it of 4.6 million compared to a loss of 1.8 million roughly the day before. Other income expenses, income and expenses. So other income was 64,000. Not sure what that was from. Loss on conversion of note, there was nothing there. Change in fair value of investment in DYG fund, 114 million, almost 115 million. I wonder if this is for their buying spree that they've been on for buying new miners. I wonder if this is what that's related to. If somebody knows better, please leave a comment down below and let me know. But that's kind of what I'm thinking. That's where they spent a lot of money on. Obviously, that wasn't there before. So realized gain on sale of digital currencies, $989. Yeah, $989. Change in fair value of warrant liability, almost 2 million. And then change in fair value of mining payable interest income, 141,000. Interest expense was 1.2 thousand. So total other expenses and income was negative 113,506,000. So income loss before income taxes was 108 million, which I think is basically on their mining purchases. They bought a lot of machines this year, so I think that's where that's coming from. So net loss was 108 million, almost 109 million. Net loss per share, basic and diluted, was $1.09 loss. Wow, compared to 13 cents loss last in 2010 and 2020. Excuse me. Weighted average shares outstanding, basic and diluted, is 99,466,946. So yeah, that wasn't good. But I think the reason for it is obviously because of this right here. I think this is for the miners that they're purchasing this year, so they're going to have a stronger presence towards the end of the year and into next year, I think. But we'll have to follow that. And then, so here we have a breakdown from Investors Business Daily. They go into the numbers as well. A couple of things I wanted to point out really quick here. Marathon's digital mining power grows. On August 1st, the company reported that it had produced 442.2 Bitcoins during the July 2021, increasing total Bitcoin holdings to approximately 6.2 thousand, with a fair market value of approximately $260 million. So if they're holding those, they have quite a bit of that. Cash on hand reached 91.9 million, and total liquidity defined as cash and Bitcoin holdings was approximately 352.6 million. So they do have a lot of reserves. Obviously, if they decide to sell, they're going to have plenty of cash as long as Bitcoin stays where it's at or it goes up higher. Marathon also announced it purchased an additional 30,000 S19j Pro miners from Bitmain, which is expected to increase Marathon's mining operations to 133,000 miners, producing approximately 13.3 exahash once all the miners are deployed. So that's where I think the 114 million or whatever that was number, where all that money went to. So that's why I reported a loss, actually. Riot Blockchain produced 491 Bitcoins in the first quarter. However, Riot is one of the most profitable mining companies in the sector with a 67.6 gross margin, while Marathon Digital posted a negative gross profit margin of 498% in Q1. And that's because I think they're just on a spending spree. Marathon Digital plans to increase machine installations over the next several months. It anticipates delivery of 75,000 miners by the end of the year, with an additional 15,200 in January of 2022. Marathon Digital expects to have the total of 103,120 miners by Q1 of 2022. With this mining capacity, it expects to produce 55 to 60 Bitcoin per day. Obviously, that is dependent on the mining network. Bitcoin network actually, and the hash rate on that, and what the difficulty is. So you got a lot of guys buying a lot of machines. You got Hive, you got Mara, you got Riot, you got Bitfarms. They're all buying a large amount of miners, and that's going to increase the difficulty on the network. Dee wrote in April 12 report that Marathon's average cost per mining machine is $2,300. Just kind of what I was thinking. I was thinking about $1,800 to around $2,500, depending on the price, shipping, and everything else. Shipping has just gone crazy. I mean, you're talking about shipping containers now costing $30,000 just to ship from China. We've seen something like that. So it used to be around $3,000-4,000. So that's a huge expense that's added on to that, which is considerably lower than the $8,000 to $18,500 he's seen others pay. Wow, that is a huge difference. Obviously, back in 2017. I was buying miners around $1,800 to $2,000 once they were fully landed and shipped. On May 24th, Marathon Digital inked a deal with Compute North to host about 73,000 of its Bitcoin miners as part of a new 300 megawatt data center in Texas. Marathon will provide Compute North with 18-month bridge loan up to $67 million to build the facility. The project is expected to begin in October 2021. Yeah, so I think that's where a lot of the spending is going. Stock analysis. The stock jumped 27% to 36.46 in the days following the August 4th news that Fidelity had bought a 7.4 stake in Marathon Digital. I think the stock is still a good buy if you're a long-term holder. If you're a day trader, you can play with the swings in the up and down position. Let's see here, what else was there? Mara stock fundamental analysis. Analysts had expected Marathon to swing to a profit in Q2, but the company posted a $1.09 share loss versus a 13-cent loss a year ago, missing estimates by $1.25. Revenue came in at $29.3 million versus $300,000 a year ago, missing views by 5.1 million. In the second quarter of 2021, we continued to effectively scale our operations by increasing our hash rate 196% sequentially from 0.7 exahash at the end of the first quarter to approximately 2.09 exahash by the end of June. Yeah, so I mean that's a very nice increase there. Marathon 654 Bitcoins in Q2, bringing 2020 production to 846 newly minted Bitcoins. Then in July, Marathon produced 442 more Bitcoin. July, obviously, we had all the miners making more Bitcoin because all the miners that moved out of China, they were shut down. That decreased the hash rate on the network and decreased also the difficulty. As of June 30th, 2021, the carrying value of Marathon's mined digital assets was $29 million, reflective cumulative impairment charges of $11.7 million. With losses still piling up, Mara stock as an EPS rating of 53 out of possible 99. So is Mara stock a buy now? The volatility of Mara stock, largely due to its link to Bitcoin, makes it a risky investment. On May 20th, the news that the Biden administration could start requiring transactions above $10,000 to be reported to the IRS set the value of Bitcoin and cryptocurrencies down. This isn't something new. I believe the IRS is already requiring Coinbase and other exchanges to report anybody that sells over $10,000 in cryptocurrencies. Meanwhile, on May 24th, Marathon Digital Executive Chairman Marek Okamoto said in a tweet he met with the other Bitcoin mining executives that previous weekend. The group, which included Tesla CEO Elon Musk and MicroStrategy CEO Michael Saylor, formed the Bitcoin Mining Council to promote energy usage transparency and accelerate sustainability initiatives. Marathon Digital also has no track record yet of strong, consistent earnings and revenue growth. Shares have lost about half their value since hitting a high in April. That's when Bitcoin hit, 64,000. That's why, and it's come down 50%. So that makes sense. Bottom line, Marathon Digital is not a buy, although investors could have jumped in as it bounced off its 50-day line. The stock is now extended, but investors should keep an eye on Mara stock as it has amassed an impressive arsenal of computing power. So here's my takeaway from this. Obviously, the report wasn't good. They lost quite a bit of money. The earnings per share is obviously way down. But here's the way I look at it. Amazon for years has been not profitable, right? They were building out their infrastructure, they're building out their warehouses, everything else. I think we're seeing the same thing with Mara stock, where they're just spending a lot of cash to grow their systems, to grow their miner count. And I think that's going to pay off in the coming months and years. The reason I think that, because I think Bitcoin is going to go up in price. I think we're going to see maybe 100,000 plus this year. If that happens, if Mara actually installs all the miners that they're saying they're going to install, and they're not going to buy any more for a while, and they may invest a little bit later on. But as long as they keep their expenses down, I think it's going to be a huge pop in the Q3, Q4 of this year, and then going into next year with Q1. So if you're a long-term holder, I think you'll do all right. Buy the dips, dollar cost average down into it, and I think you'll be all right. Obviously, this is not financial advice. Do your own research. But let me know what you guys think in the description, in the comments down below. Where do you guys see this going? I think it's going to go up higher from here. I think the worst spending that they've done is over with, and I'm hoping that with the price of Bitcoin increasing in the coming months, they're obviously their share price is going to also see that as well. So that's it. That's all I got for you guys. Have a great day. Let me know what you think down in the comments below, and I'll see you guys in the next one.